been working at Salomon Smith Barney for a year and a half now. I cover Asian sovereign credits. I focus more on countries with actively traded external debts such as Korea, Malaysia, and Philippines, although I also help out in covering Thailand, Indonesia, and China as well. Today I think the objectives that I think is most important from my perspective is firstly because as Scott had mentioned, we reach out to investors through our written reports, and I'd like to apply communication strategy to written reports. I noticed that sometimes your communication skills and speaking level is very different from how you write, and it can be a very big disjunct. And I think controlling Q&A is also very important. I'd like to be able to think on my feet and answer questions eloquently, and and be able to satisfy what the questioner wants to get out of me. Okay. This morning we actually had an Asia credit seminar, and I was talking about Asia sovereigns and what we think is going to be the outlook post September 11. And we've actually come up with a conclusion that we think that high-grade sovereigns are going to do quite well because there's strong regional liquidity and strong credit fundamentals. And we think that Philippines has actually a good rallying potential because of good budget performance, blah, blah, blah.
Okay. Okay, go ahead.
I'll talk about a recent thing that happened to me. I just got married. I had a wedding in Manila back in September. It's my second wedding. Just want to talk to you a little bit about how stressful it is to get married. Not to mention that prior to that, I was already very stressed the whole time, writing reports and making Ivan happy and the rest of the Salomon, and at the same time, like sending emails to my maid of honor to make sure everything was all set. When the day arrived and I was like, fixing up and waiting for the makeup artist to come, the makeup artist was like 3 hours late. My wedding was 2:30 in the afternoon, and there's a makeup artist with a team of 5. They're all like 6 gay men. And the 5 gay men came early. None of them knew anything. They were just standing around. And the lead stylist came at 1:30. So I was like so panicked and pissed off. But everybody was saying, oh, don't ruin your makeup. Don't cry, don't shout. Just try to be calm. So I tried to stay as calm as possible. In the end, we all made it, and we dashed to the wedding. But one of the mishaps was because we were so in a hurry to make it to the church. We actually, for the offertory during the Catholic Mass, we actually forgot to bring the flowers and fruits. So basically, I had 3 sets of couples who were supposed to bring the offering, and we had nothing to offer. So we just went around the church, like looking for something for them to offer because we forgot it in the hotel. But anyway, when all of that went well, and at least I was very relieved that it was all over. But certainly, getting married a second time, I hope, is the last time I ever get married, and I don't want to go through it again. Larger proportion than other countries. So because of that, the Philippines always needs to come out and borrow in the capital markets, because domestic market, there's not as much liquidity because domestic savings rate in the Philippines is quite low. So there's 3 factors what I think is negative in the Philippines. One is that because of what's happened, external liquidity has tightened, so they have less reserve buildup. And second, they have very poor policy fiscal flexibility because of this history of public debt. And third is because they always, because of this dependence on external funding, because of very high levels of external. Oh God, I'm still on the negative.
Yeah,
I always overtalk.
I'm gonna ask you.
I always overtalk.
It's okay. I forgot to put the camera on until about the last minute, so I'm gonna ask you just to finish, just because I want you to see more of yourself on TV. I'm sorry about that. It's my own mistake. Could you just finish, and we'll,
sure.
So that'll give you a little bit more.
No problem.
Okay,
go ahead. Positive. But I think one of the favorable developments in the Philippines is the fact that on the fiscal side, the government is doing a very good job in containing budget deficit. Also improved in the Philippines. You've got a better government, better administration, well-supported, popular mandate, and there's been less risk. The uprisings in the south have been contained. And the third factor is To contain some of the pressure of external funding, this government has actually been better at tapping official development assistance fund from the multilaterals. And that's going to help offset some of the needs to borrow abroad. So going forward, what is our outlook on Philippines? I think Philippines, so far, if they can keep up with their fiscal performance and at the same time somehow be able to meet their external funding in other ways besides tapping capital markets, then they'll reduce their dependence on funding overseas. And so far, because of that, they should shelter them from the contagion risks of any volatility in emerging markets. Sorry. Latest foreign reserve number in Malaysia came up 6%, now reaching $29.2 billion as of end of September. I think this data shows that when you look at Malaysia's credit profile, Malaysia has a very strong and stable credit. There are three factors supporting these reasons. First, and this is the short term, one of the reasons is related to the news, is that certainly in the short term, we see that there's going to be continuous strong external accounts from Malaysia. The reason why this is true is that even despite the economic slowdown and the export growth slowdown, Malaysia has been able to maintain its trade surplus and current account surplus at a far healthier level than other Asian countries. In fact, current account as a percentage of GDP is going to be the strongest in the region. And also the fact that you've seen this reserve buildup is an evidence of this particular fact, and also evidence of continued favorable, we saw some foreign direct investment flows, although portfolio flows were actually quite flat. So both current account and capital flows have been supportive of reserve buildup, and to the extent that lower interest rates in the U.S. make it more attractive to hold more Malaysian assets on shore, you're going to prevent more capital seepage going forward in the future that would run down the reserves going forward. So we feel relatively very comfortable about the external position of Malaysia. A second factor is also in the near term, because of all the cyclical downturn that's going on, we feel that Malaysia has very strong policy flexibility, both on the fiscal and monetary side. The fiscal side, because public debt level is still at a manageable 40% of GDP, they're able to still continue to pump prime the economy to counteract some of the slowdown. Obviously, this is not going to offset everything, but it's going to help. And also, on the monetary flexibility side, because of the fact that interest rates, U.S. interest rates are so low, and it provides a possibility for Malaysia to lower interest rates, which it has done recently, without too much concern about capital seepage. And so you've seen that they've already lowered interest rates by 50 basis points for the first time in over 2 years. And the third factor is a more long-term or structural development in Malaysia, is the fact that they're pursuing this corporate restructuring, which they have slacked off for quite some time. And that's going to help attract more foreign investment in the future as transparency and corporate governance improves in Malaysia and the long-term growth prospects also improve. So what do these factors tell us? Well, the fact that Malaysia has a strong, stable credit is telling us that once it trades 250 basis points over Treasury at levels much wider than other high-grade sovereigns and even some corporates, that Malaysia provides some attractive value and could still rally further. And so we recommend that when Malaysia bonds widen beyond 250, 260 basis points, which again is over 130 basis points over Korea 08, with the same rating, I think we should buy that bond. First, from Malaysia's foreign Bank Negara, it shows that foreign reserves had actually increased 6% as of end of September to $29.2 billion. This is testament to the fact that Malaysia is a strong and stable credit. There are three factors supporting this conclusion. The first is the fact that there is strong external accounts, as evidenced by this latest data. We see trade and current account balance continue to be a surplus, some of the strongest in the region, as a percentage of GDP. And also the fact that you've seen reserves continue to climb is not only support of the trade flows, but also there's been some healthy levels of capital flows on the foreign direct investment side. Combine this to the fact that Malaysia also has very low external debt, shows that it has very strong external position. Second reason is that Malaysia also has ample policy flexibility. Despite the economic slowdown, Malaysia has both the fiscal and monetary flexibility to counteract these negative effects. On the fiscal side, Malaysia's public debt level is at a relatively manageable level of about 40% of GDP. So it's able to use some fiscal stimulus, which had announced recently, a 4.3 billion ringgit package was announced to offset some of this impact. And on the monetary side, because you've seen reserve buildup and less capital seepage, and you have very low interest rates overseas, Malaysia can afford to cut interest rates without not having to worry about that driving capital offshore. So, and Malaysia has cut interest rates by about 50 basis points for the first time in over 2 years. The third reason is progress in corporate restructuring. We have seen some evidence with Mahathir since he's taken office as finance minister. You've seen some developments in both tackling the debt overhang in the corporate system through CDRC, as well as the government taking over the companies like UEM Renong, which is one of the biggest problematic companies in the region. So overall, we see that this is evidence that Malaysia is a very strong stable credit, and trading at 250 basis point over for a BBB credit, we think this is fairly relatively attractive relative to the other credits, and if it trades over 250 basis points, I think we should consider opportunities to buy this bond. This reserve number coming out of Bank Negara Malaysia showed that Malaysia's foreign reserves have climbed by 6% to $29.6 billion. This is evidence that Malaysia is a very strong and stable credit, and we believe that there are 3 factors supporting the reasons why that is so. One of them is
okay.
Went up 6% to $29.6 billion. This is evidence that Bank Negara Malaysia shows that Malaysia's reserves had actually climbed 6% to $29.6 billion. We believe that this is evidence of Malaysia's strong external position and a strong, stable credit. Because of this, there are 3 factors that are actually supporting this fact. The first is, I'm sorry, I'm messing it up. There are 3 factors supporting the reasons why Malaysia is a strong, stable credit. The first is strong external accounts. We have seen in the latest trade and current account surplus numbers. Fiscal performance is improving, but we need to wait until we see.
Excluding sort of global factors which have led to market volatility, in your experience, historically, what are the major factors that have driven Philippine bond prices?
Okay, so you're wanting to know what are the factors that are driving Philippine bonds besides the global factors.
Right.
I think first is domestic factors, basically domestic politics. Towards the earlier part of the year, there was a lot of concern about the political change regime would happen in Estrada after the corruption trial. People were very skeptical whether Arroyo was going to get the popular support that she needed, or whether her regime would falter very quickly. But we saw that that was quickly overturned. I think the second factor that also is affecting bond performance is the ability of the government to meet its budget targets. That's really driving spreads, because people are very concerned about the over excessive fiscal spending that happened last year, and people are worried that that's going to continue. And we saw that this government has done a better job. The third, I guess one of the other factors that's also driving it is the fact that I think the concerns about the Abu Sayyaf and the guerrilla movements going on in the south.
You're talking about the fiscal discipline, the government budget. I mean, how can a deficit be actually good news? From my point of view, I think the deficit is actually bad. So I don't understand where you're coming from.
Let me rephrase that question. So, Mr. Bennett here. No.
Oh, you can't think.
Okay. Get distracted. No, basically, the question is, the fact that we're seeing budget deficits, isn't that a bad thing? I think that first you have to qualify that question. Budget deficits inherently are not bad. Your country can run budget deficits as long as they use that funds productively, such that they're able to grow the economy in the future. You can actually see debt to GDP ratio decline over time. So there's no, it's not a black or white whether deficit is bad or good. And second, the fact that Philippines is running a deficit is actually an inevitable consequence of the fact that debt service payments occupy a huge chunk of expenditures. If you want to run a surplus now in Philippines, you basically have to not pay any government workers and start, you just have to cut back so much in development expenditure that you're just going to constrain the economy, and it won't go forward at all. Any other questions? Let me ask. Yes?
Do you think the peso is going to be stabilized at its current level?
I think right now the peso trading at 52 is...
What is my question? Did you hear the question?
You wanted to know whether the Philippine peso is going to stabilize at its current level. I think right now it has stabilized recently because of intervention from the central bank, but I think we're going to see some pressure going forward because of the fact that external liquidity is still quite tight, and the fact that trade flows and capital flows have been very weak, that you don't have enough reserves to support that level. And at the same time, still the continued uncertainty brought about by geopolitical risk will continue to drive sentiment for the Philippines. Yes, next question.
Yeah, I don't like the President Arroyo. Do you like her?
Everybody, do I like President Arroyo? I think she's actually done a very good job. She's a huge improvement relative to the last president. For the first time, you actually get someone who's taking things under control and is very serious about addressing both the cyclical and structural imbalances in the country. I think she's doing a good job, and it's a very difficult situation. But given the constraints, she's managed to keep investors quite happy. Yes.
But is she going to be able to do anything about the tariffs in the South?
Will Philippines be able to manage, or will the current government be able to manage the problems in the South? I think actually there have been some improvements lately. I admit that the military is very ill-equipped and underfunded in the Philippines, but we've been getting a lot of help and support recently from the U.S. military. I think that is a result of this anti-terrorism drive, and the Philippines is becoming more into focus of a concern for the West, and I think that's good. Right now, there's been recent guerrilla attacks, and 8 hostages have escaped, and a number of casualties from Abu Sayyaf have been met. So I think they're scoring points now. It's going to be a long struggle. It's going to take a lot of time, but I think eventually she will win this war. Any other questions?
Very nice.
Okay.